Good morning, builder and developer construction financing tips. And construction financing is a different game than traditional residential mortgages. And builders and developers who understand how lenders are going to evaluate risk, structure their draws, and calculate project viability consistently get approved faster and at better terms. And at Medallion Funds, we specialize in structuring construction loans for builders, developers, and investor clients across Texas and nationwide. Whether you're building spec homes, custom residences, small multifamily, or light commercial, the strategy behind your financing matters as much as the project itself. So let's break down what smart builders need to know. First is understand LTC versus LTV, and not just rates and terms. But most builders focus on the interest rate, and lenders are more focused on loan to cost, so the percentage of total project cost finance. Also, the loan to value, percentage of the completed values, the finance value, and also what the after repair value would be if you were to turn around and sell it. And construction lenders typically fund 70 to 85% of cost, depending on experience, liquidity, and project type. And the pro tip is the stronger your liquidity and track record is, the more leverage flexibility you can negotiate. Two, prepare for a lender-ready construction package. And approval speeds depends on preparations, and builders should have detailed construction budgets. So line item breakdowns, like to have the horizontal and vertical broken out, a signed builder contract, plans and specs, your timeline, your build schedule, your draw schedule, your resume of experience, your entity documents, and if we need to verify liquidity, some asset statements. And we need to know whether the exit strategy is a sale, refinance, or a hold. So as a mortgage broker, I help clients package their projects in lender language, which significantly improves approval odds. That's what I do. So interest reserves and draw structures matter. And construction loans typically include interest-only payments during your build and draw inspections. Typically, we like to see 4 to 6 draws, but that's completely negotiable. We'll need contingency reserves for overruns, 5 to 10%. And mismanaging draw schedules can stall projects. So structuring adequate reserves prevents liquidity crunches is the bigger point. 4, exit strategy drives approval. And lenders really want to know, will this property turn around and be sold? Or are you going to refi this into a long-term debt coverage ratio loan as a hold? Or are you going to hold this as a rental for your personal self? Or if you're thinking about converting it to owner-occupied financing. And builders who plan their permanent financing before breaking ground have stronger approval profiles. So for developers building to rent, pairing construction financing with the DSCR takeout strategy is one of the smartest moves in today's market. 5, work with a broker who knows construction. And going directly to one bank limits your options. Construction financing varies significantly between local banks, credit unions, private lenders, and also national non-QM lenders. Some do play in that space. But there's also debt funds too. And in Medallion Funds, we work with a little over 600 as far as the lenders that we use to structure loans. And some of those include one-time closed construction loans, ground-up investor builds, small multifamily construction, build-to-rent portfolios, light commercial construction. And the point is that flexibility saves time and protects leverage and improves capital stack alignment. So here's some final thoughts on development and construction financing. And builders and developers who treat financing as part of your development strategy and not an afterthought can scale faster and avoid costly delays. And if you're planning your next project, structure the loan with the end in mind. My name is Bill Rapp. You can visit my website at billrapponline.com and figure out how to get a hold of me. Love to contact you more and talk about your specific situation. Have a good day.